IMF predicts global public debt to surpass 100% of global GDP by 2029, a warning of growing fiscal risks. The International Monetary Fund, IMF, has issued a stark warning about the rising levels of public debt worldwide. According to its latest Fiscal Outlook report, global government debt is expected to exceed 100% of total global economic output by the year 2029, marking the highest debt-to-GDP ratio since the aftermath of World War II in 1948. The report, released ahead of the IMF's annual meetings in Washington, paints a concerning picture of fiscal sustainability, inequality between nations, and the growing pressure on governments to balance public spending with debt management. The IMF emphasizes that the situation is far from uniform. Countries differ greatly in their deficits and debt positions, said the fund's experts. Some economies have made progress in reducing budget deficits after the pandemic, while others continue to struggle with structural imbalances, slow growth, and high borrowing costs. In many low-income and developing countries, public debt has reached levels unseen in decades, fueled by pandemic relief spending, food and energy subsidies, and a stronger U.S. dollar that has made foreign currency debt more expensive to service. Over the next 5 years, the IMF projects a gradual decline in the number of countries whose public debt exceeds 100% of GDP. Yet the world's largest and most influential economies are heading in the opposite direction. The United States, China, Canada, the United Kingdom, France, Italy, and Japan are all expected to see their debt burdens grow further, largely due to high defense expenditures, demographic pressures, and major investments in technology and climate transition. Japan already has one of the world's highest debt ratios, more than 200% of GDP, while the U.S. deficit continues to expand amid political gridlock and rising entitlement costs. The report also notes that 55 nations are already experiencing difficulties servicing their debt or are at high risk of doing so in the near future. Many of these countries have debt levels well below the symbolic 60% threshold, but soaring interest rates have pushed up the cost of borrowing dramatically. It's not only the volume of debt that matters, but also its cost, IMF economists explained. Debt servicing now consumes a growing share of national budgets, diverting funds away from health, education, and infrastructure. The IMF warns that governments face a delicate balancing act. On one hand, they must invest in defense, new technologies, green energy, and resilience against natural disasters. On the other hand, they must ensure fiscal sustainability to avoid a new global debt crisis. The fund urges governments to set clear priorities and reduce wasteful spending while protecting the most vulnerable segments of the population. Stronger tax collection systems and a fairer distribution of the tax burden, especially on large corporations and the ultra-wealthy, are among the recommendations. The organization also highlights the urgent need for countries to rebuild fiscal buffers that were depleted during the pandemic. These reserves are essential to respond effectively to future shocks, whether they come from financial turbulence, geopolitical conflict, or climate-related disasters. Without them, the world could face a vicious cycle of debt accumulation and economic instability. Economists warn that the combination of high interest rates, sluggish growth, and persistent fiscal deficits could become the defining economic challenge of the late 2020s. For advanced economies, the focus will increasingly shift from stimulus to consolidation. For developing countries, however, the issue is one of survival, with some already forced to seek debt restructuring or new IMF programs. In conclusion, the IMF's message is clear. The world cannot continue borrowing at the current pace without risking long-term financial and social instability. Restoring trust in public finances will require not only fiscal discipline, but also political will, something that, as the report delicately notes, may prove to be the scarcest resource of all.